Hey guys, what's up? This is Andrew for TRENDLINES.com. So, what to say? The situation is not great, guys. Let's go through what happened this week. Amc Gme, of course, and I'm going to discuss QQQ, SPY, and the major indicators, and I'm going to give you my view for the coming week. Let's get into it. All right, so let's start with AMC. So what do we have here? I did my last video last week, guys, and I don't remember what I said, but probably that we arrive at a support area around 12. So it was here, 3rd of June. On the 20-day moving average, we went slightly below, rebounded on this resistance that is now support, and we didn't manage to make this strong move up. I was hoping for this if the rest of the market was, bullish as well. AMC hold pretty well yesterday, minus 2.7%, when the rest of the market lost. Nasdaq 3%, SPY 3%, 3.5% Nasdaq. So we're gonna go through that, but I think that AMC hold pretty well. But let's be honest, guys. It's not looking that good on the rest of the market, so I don't see how AMC by itself can really, rally. So the question is, rather to me, where could it go if the rest of the market tanks? Because it's looking like that, to be honest. So I would say the first support is once again this trend line. So we have this yellow trend line with the support around 11.7, but it's not a strong one, so it might do something like this. All right, this is the bullish case, and the bearish case is that we break that, probably find some resistance, some support on the blue resistance that is now support, and probably go lower. So I think that we might go to 9 if the rest of the market tanks. I think that 9 will be strong. I will personally buy some shares here. As I'm saying for the past months, I said that I don't increase my position in AMC because I don't have like strong bullish signals, and 9 is a good level for me to reload. So let's see. This is the bearish case. Okay. So let's see, guys. Let's see what's gonna happen. We can see that here we had this kind of fake signal. I was here bullish. The volume was here, RSI above 50, and despite that, bears took control again. So in a bearish environment, it's going to be very difficult for AMC or any other stock to really moon. Even if we have like 1, 2, 3 good days, then bears are going to arrive and just bam, smash it. So we need the rest of the market to be bullish, and we're going to go through that. It's not looking so good to me. So Gme, I lost some money here. Sorry for those who followed my alert. I mean, it's not lost yet, but I bought 190 call quite early. It was not a good trade. I bought my call, I think at 130 here. I was playing this retest. It was here. So it was, like 10 days ago. I had some hope here that we move and complete a fifth wave to 116, maybe go through that. As you can see, the fifth wave was truncated. I mean, not really truncated, it's a fifth wave, but a very small fifth wave. And it looks like this is complete. Maybe not, but I don't see the rest of the market being bullish the coming week. So I don't see how GME can go to 160, but if we have some bullish reactions, maybe early next week, then GME could, complete this fifth wave to the 160 level, which was to me what was making the most sense. And then I think we need to again take some energy. I don't think the whole market is ready to be bullish, so meme stocks won't squeeze or rally strongly until we don't have good signals. So maybe September, something like that. Sorry for delaying, guys. I mean, I'm just analyzing the situation, and the situation is here. All right, so QQQ, guys, I told you for a very, very long time since here, guys, that we're probably gonna go into 280 in June. Okay, you can watch the videos I did, 5 months ago, 3 months ago, 6 months ago. I've been saying that for quite some time. I had a very decent short position that helped me to make some decent money here. And I took almost full profits now on this position. I was hoping here we had a breakout RSI above 50. We know you have some. We had some bullish reactions. We didn't have the volume once again, which is important for a strong reversal to happen. And we didn't have, but we had the volume on some stocks, but not that many. So it was not looking so great. But once again, as I had a short position, I personally took profit between 305 and 292 yesterday. I bought yesterday, guys. I bought this dip. Inflation. I saw inflation figures. We can have a look at that. They were not good, but 8.6, I think, against 8.3 expected. Bam. So, of course, it's a very bad signal sent to the market. It's what investors didn't want to see, and this is what we had. I still bought the dip because, once again, this is a profit-taking situation, and before the end of the day, I didn't know we're going to close at the low of the day, which is bad with an increasing volume. So right now, this is not looking good. I will probably try to reopen my short position if we have a bounce. So I hope for a bounce because I have a stop loss at 288. It's a trade I gave you guys. So I think the risk here is actually to gap down, all right? And not even being stopped at 288, but at 280 or something like that. I don't know what I'm going to do if we gap down on Monday. I'm probably going to reduce 50% at the open just in case we drop. And if we have a bounce, I will reduce the rest of my position probably higher. So I will average down the loss. And then I will find myself in a situation like probably most of you guys with only my long position. Because my short position is actually a put spread. So around 270, I'm losing all of my short position. It has been built for this purpose because I don't really believe we can go below 270. We could go below 270 in the first move down. But right now, as you can see, we had here a nice, correction on the upside because we are moving down. So the fourth wave here is a corrective phase on the upside. It happens in bear markets, all right? Corrective moves go up. And this scenario is very possible, guys. The way we move here, it's the volume increasing, the gap down, it's very steep. SPY, look at that, guys. It's very steep. It's steeper than everything we had before. And it's based on macroeconomics figures in a situation where we didn't want to see these figures. So I don't like it. I will reopen my short position just in case whenever I can probably on a bounce. Bam. I hope for some good news maybe to happen next week. I don't really see what it could be. Let's have a look. So next 7 days, what do we have? German inflation, non-event. PPI, all right. Producer data, okay, so it's less important than inflation, but it's still interesting. Oh, all right. FOMC economic projections, Fed interest rate decision. All right, here we go, guys. June 15th. All right, so everything is gonna be played here. So June 15th, guys, I think that until June 15th, this momentum might just, increase. So maybe you move down and then rebound. That's a possible scenario as well. All right, very short fifth wave, we go to 270. Okay, so here is the deal. I see two scenarios from here. Either we bounce and then we move down. Okay, this is the bearish scenario, all right? And the bullish scenario is either way, guys. We go here and bam. Okay, this is the bullish case. So I see two scenarios. In both cases, we're going to go to 270. The question is, again, the Fed. Okay, I didn't do that perfectly, but basically it's going to depend where is the Fed. Okay, so, the Fed is going to impact that. If we have good Fed, we're probably going to bounce from 270. And if you have bad Fed, speech and interest rate decision, we're probably gonna dive to 230 and then rebound. So how to play that? The way we move, I think that right now the best thing is to take protection whenever it's possible. And the thing is that now it's difficult actually to get really a bullish signal that is making sure that we are getting out of this. I mean, if we go above 320, it would be looking very good, but I mean, you don't want to take all of that in your face, right? So I'm not sure how to play that. I'm gonna think about it. I'm gonna let you know, guys, in my Discord. I need some time, but I see two scenarios, and in both cases I think we're gonna drop more, either Monday, either Tuesday or Wednesday. But I think before the Fed is speaking, we're gonna drop more, and then either we bounce on good news or we dive on bad news. All right, so SPY not looking great, so same thing, probably gonna go to 370, and if 370 doesn't hold, this is the good case scenario, 370, and the bad case scenario is like 350, something like that, 340 probably. Okay, and this is the bad case scenario, guys. Okay, the good thing is that once this would have been done, guys, I think in September we're gonna have a strong bull market. All right, so we have maybe 3 more months in the worst case of, you know, the market needs to purge, all right, to, you know, every leveraged investors needs to get liquidated. It's the way it works, and then we start from that again, so there are no more over leveraged bulls in the market, and so there is no one to sell on the way down. All right, so this is what the market needs to really sustainably reverse and be bullish. So this is the good news to me, that September should be good. Bam bam bam, US 10-year yield, as you can see, guys. So we had some relief here. We went to 275, and the 50-day, which was not support, so it was hard to predict, but acted as support here, and now we are moving higher. And as you can see on the weekly time frame, this is a typical breakout, retest, and we go higher. So I'm afraid we're gonna keep going higher, and this is of course not good for the market. DXY, same thing. You can see the 50-day moving average acted very well as support. So I had, you know, this kind of forecast, but I didn't use it in my personal investment. You know, that's the beauty of technical analysis. You can have good predictions and still not make the good trades, and sometimes you're gonna have bad predictions, but you're still gonna make money. In trading, we say better lucky than good. And here, whatever, I didn't take the right choices for me this week. I lost some money. It's part of the game. I'm still very positive for the entire year, so let's keep that in mind and focus on what is coming. So 103 was resistance. As you can see, we went through that, we came back, and now it looks like we are going higher, and this is once again in line with what is happening on the equity market. Last thing I wanted to check with you guys, the VIX 27. Woohoo! All right, so yeah, no big pattern here, just up and down. Basically, once again, I checked the VIX only for one thing, a VIX below 20. I knew we were not below 20, of course, but if we are not far from that, it's easier for bulls to take back control. A VIX below 20 is bullish, a VIX above 20 is bearish. I mean, it means there is risk, and that a strong move down can happen anytime, or move up, by the way. So we want the VIX to go below 20 for bulls to take back control on the long term. All right, here this is a bullish period. This was a fake out, unfortunately. This was bullish. All right, every long period of time with the VIX below 20 is a bullish environment for stocks. All right, keep that in mind. So that's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button, so you're gonna be the first to know when I upload anything new. And stay close to shore. See you guys.